For me, there is a real question around how are you going to capitalize on AI and how it is changing your customer journey end to end? Because what we see sadly in the industry is a lot of pilots and a lot of nice experiments. We do not see a lot of true rewiring of the organization, particularly in domains that I think are extremely strategic, like clienteling or supply chain.
That's McKinsey senior partner Gemma. This June, runways in the fashion capitals like Milan and Paris are teeming with upcoming trends. And according to our latest research, a lot of folks are actually using AI now to shop. So, what can brands do to make the most of this growing AI adoption? Gemma joins me and McKinsey senior partner Holger Harreis to share what matters most to fashion consumers and how they're using AI to get it. This is the McKinsey podcast, where we help you make sense out of the world's toughest business challenges. I'm your host for today, Lucia Rahilly. Gemma, welcome back. Great to have you.
Thank you. Nice to see you, Lucia. How are you?
I'm very well. You, Gemma, are based in Milan, which is arguably the world's fashion capital.
Yes, it is.
Paris and New York might beg to differ, but
they're not on this podcast right now.
Exactly. What are you hearing on the ground? Anything interesting to report?
There is a continued pessimism or concern about two things in particular. One is consumer appetite to spend, particularly towards luxury, but I think also more broadly. And second, linked to this, of course, geopolitical tensions. So the mood is, I would say, not the most optimistic. That being said, this industry has shown tremendous resilience, as we have seen through our state of fashion data and insights. You know, when we track this McKinsey Global Fashion Index, which tracks the 400 publicly listed companies in fashion and luxury. And what we see is that not only the industry has created tremendous value since we started tracking these companies in 2010, but also that in spite of everything that has happened over the past 5 years since COVID, whether it's the decline in China, tariffs, geopolitical tensions, actually profit levels and value creation has remained relatively stable.
And within that broader context of uncertainty and specifically economic uncertainty, as you alluded to, customers are understandably prioritizing value, and affordable luxury appears to be delivering on that value, which means it's a fast-growing segment. What are brands doing in this space to attract consumers' attention?
We always try and track who are the top 20 companies that generate the greatest economic profit. Now, this is a highly concentrated industry in terms of value creation. Just to give you a sense, these top 20 companies generate 92% of the economic profit of the industry, which is super high concentration. But in general, the mid-market has been winning not only in affordable luxury, but really mid-market brands that have pursued very strategically brand elevation strategies, because they've understood that consumers indeed are seeking value. And what we mean by value is less a cheap product and much more, show me that what I am paying money for is worth it.
One thing that seems to have burgeoned as consumers shifted to digital commerce significantly during COVID has been the online resale market, the secondhand market, which can actually be a platform for value-oriented shoppers to explore aspirational luxury. How should luxury brands think about that kind of accessibility without diluting other aspects of luxury like desirability and mystique?
For the longest time, I think many of the brands, particularly in luxury, were really skeptical about this channel. And as you said, for many reasons, brand dilution, worries about authenticity. However, what has happened in recent years is resale has become not only a channel where consumers can look for items at a lower price, but I think what has also happened is they have been seeking uniqueness. But I think we have underestimated also factors such as the thrill of the hunt. And then finally finding something that you were looking for that you don't find in a boutique. And so it has become a very important channel, not only for customer acquisition, but also because the platforms themselves have scaled. They have improved their technology, so they're able to do authentication at a much lower cost and with the help of AI as well. So brands are proactively thinking about how to partner with these platforms. They're thinking about how to curate the experience that the consumers have on these platforms. Historically, this was mostly a platform for iconic leather goods and jewelry, really high value items and rare items. And now I think this is expanding much more to other categories as well, which is also going to drive growth.
One category, Gemma, that seems to be defying the slowdown, this sort of muted growth being expected across the industry, is jewelry. What's attracting customers to jewelry more so than to other categories in the luxury market?
Yeah, so jewelry is expected to grow over 4% annually for us in the next 3 years, which is basically 4 times what we expect clothing to grow. So it's a very meaningful gap between the categories. A few things about jewelry that are very important. Number one, it is perceived as a much better value for money purchase. And for the first time, given the rise in prices in personal luxury goods, what we have seen is people substituting ready to wear clothing for luxury and jewelry. The price increases in some of those categories, they have just pushed people away from buying both ready to wear as well as leather goods, particularly handbags. The second reason is it's about individuality, is the ability to authentically stack and layer pieces that become uniquely who you are. And that's something which is much easier to do with jewelry pieces than with other categories.
I think an interesting aspect of the report was that well-being emerged as an influence on how consumers are spending on fashion. How do you see brands responding to that priority?
They are actively thinking about what is the best strategic course of action. For some of them, this well being will become a core part of their DNA. Because you see, well being is not just about what customers do, it's actually who they are, it's about their identity. And brands want to make sure they align with their client's identity because that's what drives consumption, that's what drives loyalty.
And what's an example of how a brand would meet customers where they are in terms of well-being?
I think you have a massive growth in wearables that we've also talked about in a report. Now, we put a particularly fine point on smart frames. Smart frames are glasses that have some, technology that allows you to do what you do through your phone, but you will actually be able to do through your glasses and more. So Meta has invested a lot in this. You probably are aware and familiar with the Ray-Ban Meta glasses. And they have done more even with brands like Oakley on the sports side, where you can wear these sports glasses while skiing and through them gather all sorts of information about the weather, your speed, your own health vitals, the wind chill factor, the
Right.
quality of the snow, and more. So that's something which absolutely seems to have been taking customers by storm. Now there is a lot of considerations about privacy, but I think wearable technology in general, whether it's your Aura Ring, your Whoop, your smart frames, is a fantastic area of growth, is a category that is also very much linked, I think, to the well-being and to the AI theme.
So, Gemma, give us some practical takeaways for luxury leaders. What are a few concrete areas that they can focus on as the rest of the year begins to unfold?
I think this is a year of strategic reset for many brands. There has been a ton of new management teams and new creative directors put in place. So a lot of changes already in terms of people changing brands and people from different sectors even joining the brands. I think this is a great opportunity to have a hard look at where are you playing, how are you playing, for whom. And I think that would be my overarching priority for the year. And then there are opportunities that I think must explore or must pursue. One of them, we talked about it. I mean, AI, there is no such thing as being a fast follower when things are moving as fast as they're moving. I mean, we cannot run fast enough. Brands cannot run fast enough. And so for me, there is a real question around how are you going to capitalize on AI and how it is changing your customer journey end to end? Where are you going to make your bets? How are you going to transform your organization accordingly? Because what we see sadly in the industry is a lot of pilots and a lot of nice experiments. We do not see a lot of true rewiring of the organization, particularly in domains that I think are extremely strategic, like clienteling or supply chain. The second one is, how do you think about the shifting luxury consumer, not the top 2%, but frankly, the rest of the consumers that are actually being either shifting down, moving towards affordable luxury, or they're thinking about their well-being over and above everything else, or they're prioritizing experience. I would really think about, how do we recapture that consumer? What do we do? How do we stay relevant and even gain back some of the consumers that are no longer buying luxury products the way they used to?
Gemma, was there a piece of data or result in the research that really surprised you this year?
I think what surprised me is the extent to which healthy aging or health span has become a priority across the globe. I would have thought it would have been a very important priority in markets such as the US, for example, maybe Europe. I think finding out that it's also extremely important in places like China, and it is a really much more global phenomenon than we think it is also something I'm fascinated by, because I ultimately think luxury is going to be about becoming a better version of yourself, whatever that means to you. And for some people, that means better nutrition and better fitness. And for some people, it may mean, beauty. And for some people, it may mean what you wear. And for some, all of the above. And people will prioritize their spend based on what they believe.
Gemma, thanks so much for joining us today.
Thank you so much.
Now let's hear from McKinsey senior partner Holger Harreis about how AI is influencing all things fashion. Holger, welcome to the podcast.
Hi, Lucia. It's good to be here. Thank you for having me.
Okay, let's get concrete about how AI could actually transform the value chain in fashion to help bring to life what brands stand to gain from using AI.
The short message is that actually, if you look into it, there's ample opportunities across the full value chain. And the other good news is that across the full value chain, the opportunities are not only ample, but the technology is ripe, it's ready, and it can go everywhere. I think the key message that is clearly emerging is this is for real. Starting from creativity, we could be talking about beauty products, we could be talking about luxury apparel. You can just enhance the creative process with generative AI tools. Obviously, it's not the genuine creativity as we would know it from a human coworker, but it's basically a vast option creation that resides on past designs. And that brings some risks, but at least it offers a much higher productivity on the creative end. The same then holds true if we go a bit further down the value chain in terms of marketing and commercialization, where entire end-to-end marketing campaigns from the brief up until the video or the audio or the visuals can be created entirely in AI. And on top of it, you can localize it much more. You can basically create a version of that campaign that is much more talking to a Chinese customer. You can have another version that is talking to a West Coast customer or someone that sits in Southern Italy. Further down the value chain, we have something that is extremely value accretive in a sense of real bottom line impact, but also in a sense of sustainability impact, and that is demand forecasting and planning. If you use AI, you'll be in a much better position to know what consumers will be likely to shop in which part of the world and at which point in time and in which different nuances and SKUs. Doing that will increase your sell-through rate. It will allow you to not be out of stock in any store or online, but it will also reduce the returns.
Do you see more resistance to adoption because it's such a prototypically creative field, or does the cost benefit mean that adoption is easy?
If we look into a broad survey we're regularly doing with our clients, which is called the State of AI, what we're seeing is that whilst there's immense amounts of money that get spent on experiments and pilots, there is very few of them that actually make it into enterprise-grade adoption, meaning return on investment and value at scale. And why is that the case? Because what we have found through our research and working with clients, working with AI, it's not a technology transformation. It's a business transformation. And that means, as we coined the term, you need to rewire the entire enterprise. And it means that the leaders spend 3x to 5x of the amount they're spending on technology on adoption and change management across the board. Yes, there are areas where the adoption will be a little harder, and that is where it's prototypically human. And that obviously, yes, is more the design part of thing than, for example, you would say, production, managing machinery, where you would always assume, oh, yeah, that's kind of a technical topic. Notwithstanding, what we are seeing, and that holds true for the marketing as well, which is a creative profession, if you frame it the right way and you go into a direction that says we're augmenting the human work, I think it can actually help the adoption a lot. Because in the end, it's just giving you more productivity and more optionality.
If more and more brands start using AI to create optionality, feels like there could be a risk of some kind of algorithmic reversion to the mean. So then the question becomes for these high-end brands, how to maintain brand differentiation.
Yeah, I think it's a great question. It points to one of the risks of adoption of AI. And I think this is where everyone needs to be aware and very cognizant of their starting point. I mean, if you do it in a way that is compatible and commensurate with your brand value, you could be saying, look, I'm just going to use it as a tool for my human creativity. So I'm going to create many options, which I will then augment in a human way. So I just use it as a basis, as input. But then the real creative part that we would deem genuinely creative in an artistic sense actually builds on that basis. For example, in prototyping, many luxury brands would still produce physical prototypes, right? This is a lot of money. This is a lot of time. With AI, a far amount of the way into the quote unquote prototyping journey and reimagine it. And I'm not taking out the human creativity part. I'm just easing and accelerating parts of those steps. And I'm doing more of them digitally. All of a sudden, I have cost reductions. I'm faster. I'm also more to the point. I can even try things out better with my customers and make it more specific and even more attractive to them. So I can even enforce and foster brand equity value. I can even move and evolve my brand value more than I could do in a classic approach.
The use case for fast fashion seems really easy to grok in this context. And fast fashion has, of course, come under fire at various points for its environmental implications. How does AI change this calculus and potentially help improve sustainability outcomes?
I think it can have a profound impact on sustainability on the production side if you're more precise in forecasting the demand. And even before that, if you're more precise in understanding how your prototypes or your collection could look like and reduce the number of prototypes, you reduce the cycle times, that in itself is more sustainable. If you're then more precise in forecasting what will be consumed and where, you will be increasing the sell-through rate. So less will be left over from a collection that then either will be sold off at reduced prices or will go somewhere else, which is absolutely not sustainable. But as another aspect, it will also reduce logistics sustainability contributions, right? Because you'll just be much more precise and laser sharp in where parts of the collection will be shipped.
And just sort of shifting to the customer side, how are brands using AI not only to sort of ship the right volume of clothes to the right geolocations, but also to improve customer satisfaction via features like virtual try-on and so forth?
I think the first point that I'd like to say is if we all consider how we're actually now discovering products, this is probably where since, let's say, sometime mid last year, there was the most profound acceleration that we all evidence, which is through the advent of broad adoption of AI scalers or AI tools. Because all of a sudden we're seeing that the numbers, even in luxury, and talking about adoption, are now roughly at about 80% of consumers that we're seeing in our regular consumer surveys. We're starting to discover products in a conversation with an AI agent.
Say a little more about how you see agents functioning within the fashion ecosystem.
What is happening is consumers are shifting to the likes of ChatGPT and they're asking that question to ChatGPT, what should I wear? And actually what happens is you're getting suggestions. I'm taking a picture of me and I'm doing the virtual try and I'm saying, okay, that looks great. But I'd actually love to go with a bow tie. Can you suggest shoes that go with it? And so all of a sudden I'm having these possibilities that in a customer experience sense didn't exist before. And this is where I will point to one thing that for many of our clients has really started to emerge late last year. All of a sudden, we're seeing also a structural, strategic shift coming our way in the industry, which is probably as profound a shift as the advent of online commerce was. And that is the fundamental question, will the customer relationship, will the transactions all move over to agentic conversational agents? And what will that mean for me if I'm a brand, if I'm a retailer, if I'm a platform?
What does it mean for brand loyalty when customers are exposed within the LLM context to all these different hyper-personalized suggestions and so forth that, it's a different thing from shifting into a brand's ecosystem? It's more like an online marketplace, right?
Absolutely. And I think this is exactly this profound structural shift that is most likely coming our way, which is if I, as a customer, feel I'm most catered to by a multi-purpose AI conversational agent, where I get the best answers to my questions, where I get the best merchandise, where I get the nicest and most appealing items, I will be attracted to buying there. And from a brand, retailer, marketplace point of view, that is shocking because it cuts me out of the equation. That is one version of where this might go. Another version of where this might go is as a brand, as a retailer, whatever you are, you might also decide to build a conversational agent of your own. And you might even have a window of opportunity right now where you know the customer better. I could be thinking of doing something that includes the calendaring information of my customer. I could know that you're going to an art event and I could proactively suggest that you buy this outfit. I might even know which pieces of fashion you have in your wardrobe and be very mindful about saying, look, you might combine this piece with this piece. It might build the brand value towards my customer much more than a multi-purpose conversational agent.
It's remarkable. It's like having an agentic stylist.
Exactly. The real question is, will this drive value for me as an enterprise? Will it be the better option to doing it this way, or will it maybe be the better option to actually collaborating with an agentic multi-purpose agent? I think the key point is, number one, thinking about where is the value coming from, what's most attractive for brand value, for the value of the company, total shareholder return. And the second question will always be, how can I then really make sure that I drive this value? And this is back to the point of not seeing it as a tool rollout, but as a profound business transformation that needs rewiring of the enterprise.
It is an amazing time. Holger, Harreis, thanks so much for joining the McKinsey podcast.
Thanks, Lucia. It was a pleasure.
Thanks so much for listening to the McKinsey podcast. I'm Lucia Rahilly.
And I'm Roberta Fasaro.
Find us on McKinsey.com. We'll have a transcript of this episode up shortly.
And if you have any questions based on this episode, please email them to us at the McKinseypodcast@mckinsey.com.
If you enjoyed the show, we'd love for you to leave a rating and a review.
We'll see you next time.